So around 12 months back, Catwalk was very close to raising 100 crores in PE funding. And at that time, a lot of action was also happening in the retail sector, of course, in a negative sense. At that time, the deal fell apart and the company didn't raise money, and you decided to expand with internal accruals. How do you think the decision has played for the company since then, and how have you scaled up till now?
I think that the decision what we took is an outcome of internal understanding within the company, and also with the outcome of understanding with the new partner whom we were scouting with. It was purely because we felt that we would not be able to match the deliverables expected from us. So reading so many things around us where people are being called names because they failed in their deliveries, we didn't want that situation to happen for us. So we thought that it's better let's not do this time and wait for a right time when we will be able to match the expectation of the PE funds. When it comes to was this decision good or bad, I think it was a very wise decision. And we have our requirements were not so huge immediately because we are slightly very unaggressive when it comes to growth. We are very calculative in our growth, and we have in last 5 years we have never shown any aggression where we need a lot of money to scale. And our business model itself is quite asset light. So we have been successful in achieving our numbers for this year also without raising money through the private equity. Yeah.
Yes. So what is the top line of the company at present, and how has it grown over the last 2 years?
We have shown a CAGR of 20% continuously for last 5 years time by God's grace, and we might fall a bit short of 20% in this financial year. It is only due to a lot of corrections we are doing in our way of working. We have gone further deep in our backward integration because our brand is all about innovations, and innovations require that you need to sometime go back and work further on your innovation part, and then we will means fine. We might have a single digit growth compared to our last 5 years. So single digit.
What do you mean by backward integration?
Backward integration is that we have gone ahead with instead of we were basically sourcing footwear from a lot of factories, good factories in India, but due to government change of law where branded components of footwear cannot be produced cannot be used in a factory where we were getting it produced unless and until the factory people register themselves as excise paying units. The problem was that if they pay excise, then we don't end up getting the set-offs in the service taxes what we pay, and that difference is huge. And it will, in the long term, it will have a big negative impact to the efficiencies of saving the service tax. So we decided that instead of raising purchase orders from factories, we went ahead to go ahead with issuing work orders. So we, instead of buying, we started getting into job work model with them. So it's a very tedious model where you need to ensure the entire supply chain of the raw material made available for all the factories, and you can imagine doing that for more than 100,000 pairs a month. It was a big U-turn for us. A, we did this. B, we moved quite a bit of our production. When I say quite a bit, it's close to 34% of our production has been moved to places like special economy zone where there is relief on excise. So we moved almost 34% of our production to Dehradun and Baddi region.
Okay, this happened last year.
Yeah, this has been happening for last 8 to 10 months. And we are requesting, we are pitching very ferociously with the government of India also to look into the reduction of the excise. Unfortunately, footwear industry is today measured when it comes, it's taxed at par with liqueurs and cigarettes. So we end up paying close to 24% of our net realized value as only taxes, which is huge compared to 4% of apparels.
How much of the industry would be organized?
Women footwear, unfortunately, from the statistics what I have, it's not beyond 5%.
How has it been growing over the years?
It's been growing very well. Means I think without being so aggressive, we've been growing by 20%. So that's a huge taking. The taking is huge. It all depends at how correct someone does it.
So what is the top line of the company in numbers?
We have crossed 100 crore rupees last year, and
Yes.
we might do that again.
Okay.
We might grow by another 8 to 10% this year also.
Okay. So is the company ready for an external round of funding at this point?
You cannot survive without it, because the kind of growth that's available and if it is not mapped and matched correctly, we don't want to be the passerby or people who are just watching the growth happening when it's actually going to be because we believe that the next curve, the next wave of growth will be so humongous, and we are getting prepared for that growth. We are putting all our efforts, where it's IT, where it's people, where it's processes. So funds will be equally required to address that growth.
So are you looking at a similar amount at this time also, or are your expectations higher?
I also understand the compulsions of a private equity fund also. I do understand where they come from. I understand their deliverables, their deliveries also. So we are working on the financials. We are talking to some good people, with some more good people, like-minded people, and yeah, we are all set to.
So is it in the similar range of around 100 crores?
Could be, yeah, could be, because the next round of growth, the next wave of growth, what we foresee in next 4 to 5 years, will be much brisker, much faster than what we have seen in last 5 years' time.
Okay. So have you mandated a banker already for?
Edelweiss is working towards it.
So you've been, how long has it been that you've been involved in talking to investors?
Oh, I've been doing since last 5 years.
No, for this particular round.
No, this particular round we have been just recently, we did a lot of preparations this time, so that there should never be any mismatch of expectations from any side.
Okay.
Because what has happened in recent past has been very disheartening for maybe both for the PE fund and for the brands, where the brands have been called names as cheats and rogues, and their computers and their mobiles are being sent for forensics. I don't want that things to happen to us, which has been very unfortunate. I don't know whom to blame for it, but it's been very unfortunate. We don't want to end up unfortunately, we don't want to end up on the wrong side.
But are you feeling it like the retail sector has actually picked up in the last 3-4 months with a lot of exit deals in the apparel space with Biba, Anita Dobre, even in the shoes footwear segment, we've seen quite a few deals. So when you talk to investors, are you also seeing that there's, the faith is coming back and the action is coming back and people are very interested in investing, or do you find it similar to what it was a year back?
Cautiousness is there on both the sides. And technically I love people who are very, very cautious, because if they invest cautiously, they'll ensure that they'll love the way we spend, because we are very cautious people when it comes to spending. Yes, see, you need to understand, footwear comparatively is absolutely new in this race. I don't remember reading any deals happening other than in recent, And what deals you are discussing also, it's basically a miniature in front of the apparel deals what happen.
Yes.
So you will be, means if I tell you, I won't be too wrong that at least we get to know one very serious buyer every month who is interested to do footwear, because this space has a huge vacuum. So it's a good opportunity for brands in our space to exploit this position, this situation right now.
So how do you plan to use the funds that you will be raising over the next 2 years? What is your strategy?
We have earmarked a good amount of money for brand building exercise, because I think that's the need of the hour, to create the eyeballs, to ensure the mind space, and a good amount of money for backward integration. Where it comes to further expansion into business, we still want to follow the asset-light model.
When you say it's an asset-light model, how is it different from any other footwear company in the market?
We believe we have made a strategy where we will invest heavily in processes, procedures, and launch a seamless model for franchising.
Okay.
So we want to go that route, and our shop-in-shop model, which is growing at the pace of close to 1 point of sale every third day, will grow at a much brisker pace. The kind of mandates what we have signed for next 3 years, as of now, tells me that the requirement of opening up of SIs from opening up 1 every third day will move to 1 every second day.
Okay.
So we are poised to open up 150 point of sales SIs for next 2 years.
Are you a debt-free company? No company is debt-free at present in retail sector.
No, debt is comparatively, we are well poised right now. We don't have much pressure of debt as of now also. We have a track record of being quite disciplined for last many years, how we spend our money also. So debt is not my immediate worry, neither even the negotiations what we are having with our prior PE funds is, we have drawn the roadmap where we have ensured that debt will be acquired and time and again, and for next round of funding will be only the day we feel that we cannot raise any further debt.
What kind of valuation are you looking for your business at this point?
It is not valuation what we are looking for, it's never. We believe that the valuation more or less is same, and means we have understood in last few years that there is a simple model of valuation, which is the multiple of either an EBITDA margin or multiple of PAT or multiple of the top lines. That's all fine with us. It's nothing, we don't want some fancy or unrealistic valuation. Our concern is the like-minded people.
Who can also help in taking the business to another scale?
Yeah.
Or
here also we have some mismatches. Yeah, unfortunately, what I generally hear from a PE player, that once he comes on board, he'll help us in find a CFO, CXO, CMO. Well, we are far better equipped today. We don't require those kind of helps. Yes, what we require is if their global exposure, their global connections, helping us out in M&As. We are more open for that rather than.
Have you reached in advanced talks with any of the investors?
We are talking to someone in one of the multinationals in a very advanced. We are seriously in talks.
Okay.
But it is still nothing is, I should say that finalized or even close to finalized.
Okay.
But there is quite a keen concern by one of the multinational giants.
Within the footwear industry?
Yeah, they have a huge footwear background also.
Okay.
So our interest
And
in
they want to enter India.
desperately.
So so obviously this profile, this company could be the perfect way to do that.
Yeah, the marriage is all about that only.
Hmm.
That their interest and our interest are quite similar.
But this would not be a typical, if this happens, this kind of an alliance happens, it could not be a typical, fundraise. It would be more of a strategic alliance that you would have with the MNC.
You can call it anything.
Right?
I'll get my money. The company will get its money to work for next 3 to 4 years.
Okay.
Company will get a partner who has got huge global exposure and has a track record of doing footwear very successfully across the globe.
Okay.
So it's all about that.
No, but what all would this kind of an alliance be like?
It's like-minded, like they have got their global experience where they've learned from their mistakes and they have promised us that they'll not make any further mistakes. They have a track record of doing good business in footwear and fashion footwear. See, if Catwalk is entering a new era of alignment of its vision, which is a one-liner that we want to be affordable and disposable fashion. And they have a track record of running successfully a very high disposable and affordable fashion across the globe.
Okay.
So they have got good reach in
Niche segment.
It's a back end, it's all about back end. It's all about experience of running the brand very successfully. Because in fashion business, it's all about how deep you are in sourcing. And they've got amazing experience of sourcing and they've got so much of experience and so much of strength for negotiating the right prices, for negotiating a good deal.
And they also understand the industry, obviously, unlike any other.
Yeah. See, that is the like. So for me, unless until my board has got something, my board is also aligned to it. That it is the like-mindedness what we are looking at, and not how much more somebody's getting. Valuation is temporary. It's a vanity according to us.
So how are the margins in this business, in the footwear business?
Let's do some guessworks now. Let's do some simple maths rather. You give 24% of your net realized value to the government of India. Discounting is the cult and culture of this country, so you give away 20% to, at the end of the year it works out 20% of MRP goes away as discounting because EOSS is a big business model. So now what are you left with, and the ongoing expenses of running the stores, which is one of the highest in the world. Yeah, our margins are under pressure. So I tell my business partner also, listen, this tech structure or this is not there to stay. If you are going to give me your multiples assuming that what is my earnings as of date will be slightly unjustified. So you have to be reasonable with us. Not with me alone, with any footwear brand. You have to be reasonable.
So still it's the footwear companies are seeing PE traction.
I think everybody understands that this kind of tax regime is not there for long. So profitability is bound to happen. And the end consumer is getting seasoned. They're getting matured. Now they know, they're getting so matured. They understand fashion. They understand fashion like anywhere across the globe. And so much of exposure all around them. And please, we should never forget that India is all about young. It's all about being very young. We do today also have the youngest population. And this is going to only grow. So I think if it is addressed correctly, there's a lot to take from this country. Consumption will be a true story.
You also spoke about inorganic growth and acquisitions. What kind of a company would fit into Catwalk if you look at inorganic expansion after your PE round?
You see that there's so much of buzz in the market. There's so much of buzz in the fraternity of retailing. But I think it's all about mindsets. It's all about meeting of minds. So we never thought Aditya Birla will take up pantaloons and take up retailing so seriously. We never knew all this. At least I never thought that they will enter retailing, and we never thought that we never knew that Walmart can go wrong with maybe Sunil Mittal. So today we are all in a very early stages. Anybody will spring a surprise, and you be rest assured and get ready for a lot of surprises. See, I tell my team also, if we say that this is huge growth, then this is just 5% of what is there in offering in next 5 years time. This business will grow with more than 20% growth. So the business will be doubling in next 3 to 4 years time. I'm only worried about myself as an Indian brand and my counterparts. I've seen so many entrepreneurs failing to scale. After a certain height, they can't take up business by themselves. So I think it's all about, if you are not prepared for it, then getting sold or will become and at that time, trust me, someone will get fleeced.
Is that the reason that you say that we are not very aggressive and
Yeah, we have a very bad track record. We have been very slow in our growth. We have taken a lot of time.
But it's also been consistent, right?
I don't know, 20% growth, I find it super good. No, but the way the industry is grown, we have not grown the way the industry is grown.
So how many stores do you have at present? What are the numbers?
We have got around 350 shop-in-shop and operating 350 odd shop-in-shop and 30 standalone stores as of date.
Okay. And how do you see it by this financial year?
Standalone stores will still remain 30 and shop-in-shop we might add another 30, 35.
By March 2014?
Yeah. So we will be somewhere close to 400 plus, and we have a mandate to open up 150 SIs next financial year and next to next financial year.
Okay. This is a mandate with?
Good LFS, and existing LFS. This includes also the existing. So now just imagine this kind of a growth and supply chain management, if it is not in place, and had we not gone for backward integration, had we not gone towards innovations, it would have been
also had a lot of investment going into it.
Yeah, the working cycle goes smaller when you go for backward integration. So it has got its own set of challenges.